Hello, chart watchers and Decision Point faithful. Welcome to this Monday, March 9th, 2020 Decision Point show with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, we welcome you to the show. We have lots to talk about. Boy, it's just been a crazy market right now. So I'm I'm just going to open it up with what are your thoughts right off the bat, Dad?
Okay. Right off the bat would be yes, Virginia, the sky is falling.
Yeah, it's definitely, again, I know we've been talking about this as something that, was already technically overdue. But I don't know about you. I wasn't really expecting the veracity of this decline.
No, well, I was. I've been expecting something, especially since this coronavirus. I mean, I really, I wasn't feeling at all comfortable. I thought it was really, really possible we were going to get something like this.
Mm-hmm.
And, I woke up, I frequently wake up at 2 a.m. Um, Pacific time, and I especially wanted to check, let's see what the futures were doing this morning. And I got on and I looked, and the Dow's futures were down 1,200 points. The S&P futures down 145 points.
Hmm.
And I watched for a while, and they weren't changing. And I was really getting upset. I said, what's wrong with our quote system? Well, I figured it out. They were limit down. The futures were limit down.
Oh, right.
And so we didn't really have any idea what the market might open at until it did open. And
Right.
at that point in time, I thought, well, we're probably going to get a 2,000 point down day. And then I saw what was going on with the crude oil, and that was a mess.
Oh,
And,
yes.
yeah.
Still is. I think that's still going to be, it's just, what do they call it? It's just piling on to panic and all of the stuff that's going on right now. But as far as our agenda, and we've already talked about here, we do believe we have a bear market in progress. Certainly, the percentages are speaking toward that. We do want to talk to you quickly. A last chance discount. We have actually changed our charter discounts. They are no longer available, but just for watching our show, you can use that discount card, discount coupon, charter up, and you can see it right there in parentheses. I'll bring that back up at the end of the show, but you'll get $5 off a monthly subscription should you be interested and haven't already gotten with us here at DecisionPoint.com. Bonus, of course, we're going to just take questions. Right now, the question box is open on the live show if you're watching live on StockCharts TV. So feel free to throw in any questions you might have for us. But we're going to dig right in. We have lots of charts we want to show you. I wanted to point out right off that today we did see the NASDAQ get an intermediate term neutral signal. And this was triggered when the 20-day EMA for the NASDAQ 100 crossed below its 50-day EMA. We went to a neutral because the 50-day EMA is still above that 200-day EMA. So what are we looking for next? That would be 50 and 200-day EMA negative crossovers. That would change things here. The NASDAQ, we're still waiting on a weekly PMO sell signal. So everything else is, Dow had already shown us a long-term PMO on the monthly chart. We had a negative crossover back in December as a possible warning. So anyway, I just wanted to point that out. And then our sector scoreboard, it's sure a lot more red than it has been in a very long time. Right now, our only intermediate term trend model buy signal is with utilities. We're going to take a peek at all of these sector charts and give you kind of our take on what we're seeing. But right now, really not any place that is unscathed. And utilities, while it is still on a buy signal, is still falling with the rest of the market. It's getting carried down there as well. So, oh, very quick. There it is. Special discount code, Charter Up, and you can save $5 a month on all of our monthly subscriptions up until our next show on Monday. And that really will be it. We won't be running any more discounts for a while. So
That's
if you want to...
DecisionPoint.com.
Yes, DecisionPoint.com. Yeah, excellent. I probably should have put that on there. All right, let's go ahead and I wanted to look at a couple of intraday charts here. Just to give everybody some focus here. I know we were talking about it before the program, but one of the things that on all the business channels that they were touting was the fact that that last hour of trading, if we start to see things move up, then this is all okay. And then of course we were starting to see that move, and then in the last 10 minutes of trading, everything fell apart. And so we did end up near the lows for the day. And if we go through, I can even show you a few of these other ones. There's the Dow, which they were really focusing in on, also coming down toward those lows. And I wanted to look at the NASDAQ 100, also coming in on those lows. So we all of these really opened much lower. Many we came down to testing those lows, but we didn't quite actually get there. All right, I'm gonna pass it to you. I know you had a few charts you wanted to show, and we can discuss more about what's going on in this market and what to expect, and what we're doing as far as watching it.
Okie doke. Always have problems at this part of the show. Okay. I wanted to, first of all, the coronavirus problem is really the main issue causing all the turmoil with the market. I mean, that's my opinion. The problem is that it's just everybody's pulled back. Nobody's going to stores. They're not going to fly airplanes anymore. They're not going to take cruise ships anymore. And this kind of thing's going on everywhere. And there's just no point in trying to be optimistic until we see people starting to go back out. When you see that turnaround, and then then we can maybe think that this pullback or this pull down or fall down is really going to be over. But I got this earnings chart up. Oh, and I also the crude oil thing that was totally out of left field. And
yes.
If there was going to be anything bad coming out of coronavirus to continue what we already had, that the crude oil issue just blew it out of everything out of the water. But people are talking about bargains. I'm telling you what, bargains are not to be had. Here's our current. This is the last quarter of that was actually the third quarter of 2019. But you see, the PE is still about 21. Still, the price is still well out of this range. Bargains down here at fair value, and then here undervalue. As I keep telling people, we haven't been at undervalue since 1984. That doesn't mean we're not going to get back there. I think this is a good chance that that's where we're headed now. But I was thinking about some potential downside projections. And this is not, I'm not saying this is where it's going to go. I'm just saying realistically, it could go from the all-time high down to fair value. That's about right now it's about 1,300.
Oh, the undervalue level, yeah.
Right, that's down to 1,300 for the S&P. Now that's look over to the left. It's a 59% decline from the all-time high. Now, if we look at the Dow, and we'll just use that same um, um, decline. We'll say a 59% decline on the Dow. Where would that take us? And that gets us down about,
Oh, very close to that top we had back.
1,200 is what it
Yeah.
is. Yeah, 1,200. I'm sorry, 12,000 for 59% decline. Now, 59% is hardly a big deal. I mean, it's done it. You know, we've seen it. If you've been in the market for 20 years, you've seen it twice.
Mm-hmm.
So we're certainly overdue for a good shaking out. Okay. So that's our downside estimates possibility. I'm not saying it's going to go there, but I'm just saying realistically it could and still be within the realm of reality, whereas we've been operating well above the realm of reality for a long, long time. One of the things, I wanted to point out, we're not going to get a good interest rate chart today before the show's over, unfortunately. But I had an article and I was just saying that this doesn't look good. This is a really bad look. And we can see we've done this kind of thing before. And in the past, it's kept some spread between the long duration and then short duration. But it looks like everything is headed to the basement, to the toilet. And we've got what was the 10-year today was about, I don't know what it closed, but it was about 0.5% for 10-year bonds. That's insane.
Absolutely. They're talking about, what was it? The 10-year was under 3, I think, today. 0.03 was the reading on that yields.
The 10-year was like say it was at 0.5%.
Yeah, which was lower than we've seen.
The 30 years, getting close to 1%. But I don't remember. Exactly on that. There was another thing that I wanted to show, but I'll get off of this and try. Looking at the Silver Cross Index, that means that that's the percentage of stocks within the S&P 500 who have a 20 EMA above the 50 EMA. Right now we're at, there's 21%. It's only 21%. So we're really hitting the bottom. We're going to get oversold here. We are oversold already. And this indicator does get very close to the bottom. But here we are on the SP 400 at 14% and the 600 at 14%. So we're getting really flushed out there.
I've noticed, and I don't know if you're getting ready to show that chart, but the Golden Cross Index, I wrote about it in Chart Watchers last weekend. I mean, we're still not really seeing deeply oversold, really only now, I think, just getting oversold.
Yeah, it's starting to turn down. It takes a lot longer for the Golden Cross Index to respond. But it's headed down, and it'll take some a considerable move to get that to turn back up again. But right now, I'm looking at the worst case. I truly am.
Yeah, absolutely.
We're talking about a bear market. Yeah, I wanted to hit that. Well, a bear market would be a 20% decline. And for intraday, the SPY, from the intraday high, the all-time high, to today's intraday low is 19.5% down. So we're so close to being officially there. And so as far as I'm concerned, we are. Well, I said that in the weekly.
Oh, and the weekly wrap on Friday.
Yeah,
for
weekly
our,
wrap. I said that, that's it. We are. I consider that we are, and can be proved wrong, but for right
Well,
now,
it's interesting that you mentioned that because I did get an email from a subscriber who says, okay, I know you don't maybe pay that much attention to what your colleagues are saying, but I guess Arthur Hill, and then, who was the other? Maybe it was Greg Schnell. I can't remember, but two of them, he says, they're saying we're in a bear market. And he says, but then you have Tom Bowley who's saying, no, we're still in a secular bull market. And my first thing is just to tell everybody I worked with Tom for over 2 years on Market Watchers Live while we were running it, and people may think of us as perma bears, but he's about as close to a perma bull as I know. So he's a major trader though, so he can usually be nimble and take advantage of a lot of this stuff. But I think we've pretty much laid our thoughts out that we're in a bear market.
Absolutely.
Yeah, and I don't really see, I just don't see us being able to just dig right out of this quickly, just because there's so much uncertainty, and of course the market doesn't like uncertainty. And I think we had a VIX reading down, up to over 50 today. I haven't looked at the final.
It was up there, yeah. On the sectors, I was telling you before the show, 7 of the 11 sectors, S&P sectors, are officially in bear markets.
Seven.
Certainly based on the intraday highs and lows at both ends.
So 7 out of the 7 of them.
Right.
Oh my goodness.
And energy. Well,
let's just take a tour. We've got some time. Let's go through these and look at them.
With energy, you got to actually go back a ways to find the high. But from there to there, 53%, 54%. Big mess.
Yeah.
Rest of them, let's start at the beginning again. The rest of them we're looking at, either this is being in their all-time high or this spot here being their all-time high. And here we go, 22%.
Yep.
It's not going to work out that way. If you go from close to close, it's 19%. But as far as I'm concerned, this ticks the box for me.
Right.
But notice again, we had, I keep going over this, how these indicators were just showing the deterioration while the price is going up here, high all-time highs. We're getting this deterioration in the 20 EMA, 50 EMA, Silver Cross, PMO. It just
yeah,
it was a mess going into that.
Yeah, and we found, I know we both wrote about it too, so many warning signs, technically, without even considering the coronavirus or.
Right. And yeah, without the coronavirus, this kind of thing would probably set us up for a pullback, something like this. But as it turned out, no, with the coronavirus, it's just pulled the plug. Mm-hmm. Pulled the plug.
Yeah, discretionary.
This one is doing better than the rest. I believe it's only, if you go from, right down, today's close, it's only down 10%, we'll say. And this is an unusual configuration here where today's low didn't take out the prior week's low.
Right. That could actually be a little bit bullish for.
But staples, that's people going out and buying toilet paper and
Yes.
all that, all the stuff that they're stocking up on for the, who can say?
Let me see if I got it over here and I can put us in. Yeah, I've got it, so I'll share. I'm not sure what's going on with yours, but here we are.
Yeah.
Okay, so we were looking at staples, but now we're going to move into financials.
Yeah.
Okay. Really pretty ugly here. And I know you can help us, everybody out, to show how you can use this inspect tool. I haven't used it like you are, so I'm assuming I put it where I want and hold the button down and then, drag it down. And then you can see over on the left, it's kind of grayed out. It might be hard for our viewers to see, but in the far left, that'll tell you the
28% on financials down. And notice that today's bar is kind of hidden in the weeds down there with the volume. So you got to kind of watch out for that when you use the chart.
Yeah, make sure you haven't missed a bar.
Right. But
I think that's happened to me a couple times. Not before I wrote, though.
The silver cross deterioration. Yeah.
Yep. Okay, next up, healthcare.
I forgot to quit my mail program, so that's the music we're hearing.
All right, so healthcare has been somewhat of a bright spot. I mean, if you want to call, let's see, what do we got here? Going from that high back there down to where we are now, we're down not quite 13%, but if you go intraday to intraday, it's 14, almost 15%. But I mean, to me, I like seeing that kind of a support level holding, But again, everybody is getting drugged down with the panic, and so that's why I know when I'm writing diamonds, especially this week, it'll be more about filling your watch list, because when things are when the VIX is over 50. It's panic, it's a frenzy, and it's just not safe. Let the big guys, I guess, get in there. But anyway, yeah. So we have a little bit of a bright spot here on healthcare, but the indicators don't look,
call it that, yeah.
They don't look any better. So we do see 30% though are still on silver cross or 2050 day EMA crossover buy signal. So not quite as beat down. Industrials, a lot of people talking about the transports really getting hit right now, which makes sense, of course, with oil and Dow theory, all of that. So yeah, and this has been hit really hard as well. So let's see, we're going to do a little inspection here to where it is currently. We're looking at about 23%. So industrials in a bear market. Here's materials, which if you look here, we're getting ready to get a 50-200 day EMA negative crossover. That'll be a long-term sell signal. So if we go from the all-time high up there, where we are trading now on a materials, bear market, 21, 22%.
Right.
And next.
And that's close to, notice the 50 is about to go through the 200 on the.
Yes.
So notice the death cross. I think that's a little dramatic.
I don't know right now. But, if the S&P gets that, I think everybody's going to think it's a death cross. Real estate. All right. Another, if you want to call it, brighter spot. There's a run on mortgages right now with the rates low as they are, but that's more on the financial side. Here's 15% is what we're looking at on real estate.
Yeah.
And still, all of these indicators are still fast forwarding down. So again, it's just, if you want to find those winners, there are out there. Obviously, there are pockets of strength, but what are your odds? So, all righty, let's see in technology. What are we looking at here? About 20.67% drop from that intraday all-time high. So
Right.
bear market. And no improvement going on here in these indicators at all. And finally, utilities. And then I'm going to look and yeah, I think we're good on questions. Mostly, of course, they did ask about our discounts again. So I'll pop that slide up on our final thoughts. But here's utilities. And again, it hasn't tested that low that we saw last week. So I think that's a positive, again, if you want to call these positives. But so here from that intraday high to where we're trading now on utilities is only 11%. If you go down to the low it had, almost 15%. Correction mode. And that's our tour of the sectors. Was there any other charts you wanted to talk about? I know there was a mention today, we briefly talked about it, as far as what I'm seeing, viewing writings, is that everybody, especially on those financial networks, are telling you it's time to bargain hunt, that you're going to get, some great bargains out there. And of course, I'm not interested in bargains until the fear factor goes down, until the VIX starts to tame and move down. It's just, there's too much panic here, but certainly you could be looking at some of those big names. But I think, can I pass it to you? Do you have your Apple chart at the ready? I know we're going to have to close this up, but.
No, I don't have it at the ready, actually.
Okay, well, I'll pull the chart up and we can look at it on a monthly. I think that's what we want. Yes. So first of all, of course, we're parabolic now. But right now, from that all-time high to where it is currently, we're looking at a 19.5% decline. But if we go in here very quickly and I look at these percentages that we've had on other corrective moves, if you want to call it, there's a 75%. Right over here, 50. Over here, 34. Back here,
40. That one's
40.
Yeah.
So a move while the bar is very long, that's not a bargain to me. I would say that we still have further to go. And this is the kind of thing you might want to look at when you're going through your stocks as far as hunting for bargains. All right, well, that pretty much covers it for us today. I know it's pretty crazy out there, so be safe. And again, here are the discount code for DecisionPoint.com. You can get $5 a month savings only up until Friday. We did close out our charter subscriptions last week, but we want to offer this last minute discount to anybody who wants to subscribe on a monthly basis. Just use that code charter up when you fill it out. And with that, I'm going to close us down. Hope to see you again.